Oil surged, bond yields climbed, technology stocks cracked, and gold pushed higher. These weren't four separate moves. They were one connected macro trade. To navigate this volatility, we have to look past individual headlines and see the underlying mechanics. Here's what moved, why it moved, and the levels that matter for next week. Brent gained more than 7% across 5 sessions, while WTI climbed more than 8%. The primary driver was a sharp increase in global supply risk. The previous US-Iran agreement expired without an extension, shipping through the Strait of Hormuz remained disrupted, and hopes of a diplomatic breakthrough faded. Brent reached 94.71 before easing toward 93. For next week, $90 to $91 is the first major support zone we are watching. Below that, watch 87.50 to 88. These zones will be critical for maintaining the current bullish structure against potential profit-taking. Resistance sits between $94.70 and $95. A sustained move above that area would expose the psychological $100 level. Higher oil prices revived inflation fears across the globe, and bond markets reacted instantly to the prospect of higher-for-longer interest rates. The US 10-year yield returned to approximately 4.71%, while the 30-year reached a significant peak of 5.25. For the 10-year, 4.60 to 4.65 is the immediate support area. We expect buyers to emerge if yields dip into this range. Resistance sits at 4.75%, followed by 4.85. A break above these could trigger another wave of heavy equity selling. If yields remain above 4.70%, pressure on expensive growth stocks may continue. Technology stocks have already taken the impact. The Nasdaq fell 1.3% on Tuesday alone, as investors repriced the cost of capital for high-valuation technology firms. The semiconductor index was hit even harder, dropping 5% in a single session. This was a clear sign of de-risking in the sector. US tech support sits around 29,300 to 29,400. Below that, we are looking at the 29,000 level for floor support. Resistance is concentrated between 29,750 and 29,850, with 30,000 remaining the major psychological barrier to clear. Next week, Nvidia earnings become a direct test of whether AI demand can truly overcome rising borrowing costs and stretched valuations in tech. Gold was the counterweight, gaining approximately 3.1% this week as the dollar weakened and concerns around debt and inflation increased. The first support zone for gold is 44.80 to 4,500. Below that, look for secondary support between 4,400 and 4,440. Resistance sits at 45.80 to 4,600. Acceptance above 4,600 would keep the broader recovery intact for precious metals. Next week's equation is simple. Oil above 95 reinforces inflation. Yields above 475 pressure tech. But strong Nvidia guidance could change everything. Also watch durable goods, GDP, and PCE readings. This is for education, not trade instructions. Follow Overleaf AI. Trade with precision. Act with confidence.